to $1,000. Albert is your financial assistant, helping you budget, save, and spotting you money in a pinch.
I'm downloading Albert right now.
Download the Albert app and use promo code MONEY to get up to $1,000 for your bills, rent, groceries, and more. The Albert app helps you budget better and save more money so you reach your financial goals faster. Download the Albert app right now and use promo code MONEY to get up to $1,000. Use code MONEY to get up to $1,000.
At Audion Hearing, our mission is simple: to make better hearing affordable for everyone. We're proud to offer high-quality, rechargeable hearing aids starting at just $98. Clear, comfortable, and ready to use right out of the box. And here's a study worth hearing. Research shows that wearing hearing aids can reduce your risk of dementia by up to 61%. Join over 1 million happy customers and hear the difference today by going to audionhearing.com. That's AUDIEN hearing.com.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical condition, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Apply for Social Security and Medicare. Mike, one of the many questions that people have as it relates to Social Security and Medicare is, what's the difference in terms of how much I earn based on when I apply?
Yeah, and there's plenty of confusion around all this because the ages have changed over the years as we've made reforms to the Social Security program, and there's different ages for Medicare and Social Security. So first things first, for vast majority of folks now, 67 is the current full retirement age. for Social Security, whereas 65 is the eligibility age for Medicare. And then you scale up or down your benefits depending on how much earlier or later you claim when it comes to Social Security.
An important thing to note, you don't have a do-over on this. Basically, when you claim Social Security, that is what you are locking yourself into. The programs where you used to be able to adjust that, they haven't been around for a while now.
No, and so, for example, if you end up claiming your benefit at 62, in addition to having penalties for how much you get in earned income, you're going to be collecting about 30% less than your full retirement benefit, whereas if you wait all the way until age 70, you'll be collecting about 124% of that full retirement age benefit.
Our guide is titled How to Apply for Social Security and Medicare, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Thursday. Welcome back to the Financial Exchange. It is a jobs week here on the Financial Exchange, even though that headline got a bit disrupted this week from other news that has been making headlines. I'm not even only talking about Venezuela because we got a bunch of juicy bits from the president yesterday on all sorts of different areas of the economy, from housing to the functioning of the stock market. So we'll be diving in there. We got the JOLTS report yesterday, initial jobless claims this morning, and we will have a full-on monthly jobs report tomorrow morning. All this with the backdrop of a labor market that has undoubtedly been weakening over the last several years and been showing that throughout the course of the last several, really at any data point you look at, whether it's the unemployment rate, the pace of job hiring. The only one that really hasn't consistently flashed warning signs would be the pace of layoffs, but that oftentimes doesn't. It oftentimes shows up when you're in a truly bad and rapidly
talking about
falling
first-time claims.
Yeah, first-time claims for unemployment,
which have been quite low and suggestive of a strong labor market.
Correct. Yeah.
Sorry, you said that, but that's the real puzzle because of their frequency and their superiority, according to some, as a forecast.
Yeah, they are more rapid in terms of when they come out, and so that does give you some more up-to-date information. But I think if you would take it in the context of what we saw. And what we ended up defining last year when people were losing their minds over the SOM rule recession indicator and all these factors, if we take it in the context of a labor market that rather than in free fall is one that has been normalizing after an exceptionally tight period of time during 2021, 2022, and most of 2023, then maybe this is actually normal for jobless claims, and we're still during that still seeing that normalization period. I would love that answer because it means that we might not be heading for a recession. It's also pretty abnormal for that to happen.
Well, there's evidence for that. GDP growth was quite strong in the second, and quite strong is an understatement.
Yeah.
It was unnaturally strong in the second and third quarter. The JOLTS report that you referred to that we got data on yesterday the ratio of vacancies to people available to fill those vacancies has come down from about 2 to about 1. So it's come down by 50%. But in historical terms, Mike, as you know, it's still quite, I'll say, robust. It's much higher than it was in the mid-2010s, about as high as it was in the late 2010s. We got productivity data this morning that suggests that productivity exploded in the third quarter, roughly a 5% annualized rate. Last time we saw that was a couple of years ago, so it's not unprecedented, but it's suggestive of a vigorous economy. Trade deficit is falling. That's a slightly different matter that maybe we'll talk about later.
So let's talk about the job data that we've gotten so far and kind of jump in here. I just saw a headline flash again along Bloomberg that futures are falling after a worse than expected weekly jobless claims report. I don't see anything worse than expected here. Initial claims did increase slightly by 8,000. They came in at 208,000 for the week ending January 3rd. Previous level was revised up slightly from 199 to 2,000. This is a very low and slow pace of jobless claims. Just to set the context here, this is the lowest level for this average that we've seen for the last 4 weeks since April of 2024. So this is a non-concerning report.
Yeah,
that we're getting from jobless
I'm not
claims
saying
right
the
now.
economy isn't slowing. And another headline is flashing. Moran, the president's puppet on the Fed Board of Governors, wants 1.5 percentage point cut in the federal funds rate
Which
over
is
the course of
currently
this year.
Triple what markets are estimating.
So he's to call it out loud. Look, he again is the president's toady on the Fed board. You could say you like that or you don't. You could say you want the president to control monetary policy or you don't. That's a slightly different matter. But he's an outlier. There's nothing to suggest the economy needs effectively emergency support from the Federal Reserve right now, especially considering that inflation, though it has come down a lot in the past couple of years, remains elevated relative to the Fed's goal.
So the weekly jobless claims number, no concerns there. Layoffs do not appear to be happening in mass in spite of Challenger Gray and Christmas's predictions all from last year of all the announced layoffs hitting the highest levels in years. We just haven't seen it in the real data, so I'm going to dismiss that one. JOLTS report out yesterday. Weakest pace of job openings in 14 months, I believe it was.
Well, it's a level. We don't really look at the pace.
Not pace,
yeah,
level.
It's a level. I know you know that, but but it's still nearly 1 for 1. That is the number of vacancies to the number of unemployed people, which pre-COVID would have been considered indicative of strength.
So I think on the side of jobless claims, no trend for an indication of layoffs. On the side of job openings, some indication of a weakening over the last 14 months, but
that's relative, like you
relative
said. Could be, I like
to
your
a very
phrase normal.
heated
I like
time.
your term normalization, Mike. The labor market was feverishly hot under COVID, and that helped to push up inflation.
Final data point we will be getting on the labor market is tomorrow. So tomorrow we will be getting that jobs report, the all-important jobs report. 2 surveys that get put together will tell us information about how many people are looking for work, what is the unemployment rate. They're going to be doing a household, or they've already conducted a household of surveys, a separate survey of households, and then a separate survey of businesses to get us a combination of how many companies hired people in the aggregate, how many people were hired in the month of December, and combine that with how many people were looking for work, how many people had jobs, give us that unemployment rate that likes to get focused on quite a bit, and the Fed is quite focused on. Expectations that I am seeing, median forecast for jobs created to come in at 73,000 for the month of December. Pretty low number compared to where we've been for the last several years. I think, if you look at a chart of this, we probably averaged 300,000 to 400,000 back in 2023, 150 to 200,000 in 24, and then below 100,000 for 2025. So clearly a trend line that you can draw there. And the unemployment rate expected to come at 4.5%, coming down slightly actually from 4.6% the previous month. Anything else to say about expectations for tomorrow's jobs report? I think the context of all of this is it's some of the first normal reports that we should be getting following the government shutdown. And while there might be some small lingering effects of that government shutdown in these reports, generally speaking, we're getting a normalization.
I'd say don't get too bogged down in the details. The critical thing, it depends on what you're using this data for. If you're just trying to forecast unemployment because that's your job, and there are some economists who just do that for big banks, et cetera, then you are very concerned with every 1/10 of a percentage point. The bigger picture here is that unemployment in the 4s or 5s, assuming it's not going up or down dramatically, is historically speaking, I was going to say good. It's never good that anybody who wants work can't find it, but that's indicative of a strong, anything in the 4s or 5s would be consistent with a strong labor market.
Yeah, and I think that's some context. I was speaking with somebody this morning who, was talking to their daughter, and their friends are all struggling to find jobs in their area, and we hear this repeated a lot, that younger Americans right now, especially in the white collar workforce, are struggling to find work. AI is getting blamed, but honestly, I really look at this and think that is much more indicative of just what we are experiencing, which is the pace of change matters. We came off of an extraordinarily tight labor market a few years ago. It has now loosened. It's loosened to a point that historically is pretty normal, but compared to where we were a few years ago, that is pretty abnormal, and people are feeling the effects of that.
Yes, we might have to get used to unemployment being. It may settle down somewhere in the 5s. If there is indeed a productivity revolution propelled by AI underway, we'll need fewer people to do stuff as the economy is currently organized. It'll reorganize around different goods and services, and jobs will shift. But that transition could be disruptive. That sounds like a very cold way of saying that people may not find jobs as quickly as they'd like. It sounds callous, but that's just kind of the reality. And this morning's productivity numbers are supportive. I'm not sure I buy it, but they're supportive of that idea.
Let's take a quick break. When we come back, a little bit more on the state of the labor market, minimum wage changes, and then I want to get over to the housing market after that next on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage, as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing in Boston.
You outgrow your timeshare and now you want out, but you can't. You can't sell it and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. The DAV 5K raised over $150,000 last year, but we still need your help. You can support our great American heroes by visiting dav5k.boston and making a donation today. Your participation helps provide vital services like free transportation, 2 medical appointments, and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
I always find it interesting, but we are broadcasting right now from Massachusetts, which has a slightly higher than average unemployment rate. The average unemployment rate across the country in November was 4.6%. I'm counting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 states. 10 states, including the District of Columbia, that are over that rate. Massachusetts, very slightly higher at 4.7%, along with Alaska, Kentucky, Delaware in at 4.9%, Michigan in at 5%, Nevada at 5.2%, Oregon at 5.2%, New Jersey at 5.4%, California at 5.5%, and D.C. up at 6.5%. I frankly, I talked about at the beginning of last year how some of the policies from the Trump administration surrounding grants for higher education as well as medical research out of those universities could hit the Massachusetts economy a little bit harder than others. I don't know that this evidence really supports that, right? If we're seeing an unemployment rate that's 0.1% higher than the national average, I don't know that it has anything to do with policy.
Where was it a year? Do you have? Sorry, I don't have the data. Where was it?
The pace of change for the Massachusetts unemployment rate has been
change greater,
a lot faster.
So maybe hard to tease out other factors, though, like you said.
Yeah, it tends to be. But I think when we talk about, hey, how are you feeling about the state of the economy? This between gas prices and the unemployment rate in your area, those two factors play a big role in how you're thinking about things. For instance, in Hawaii, South and North Dakota, you've got unemployment rate under 3%. I'm guessing it feels like a pretty darn good labor market there, whereas if you're in California, you're looking at something at 5.5%. It is a very different situation depending on where you're looking at.
Yeah, I don't know. It depends. Like you said, it depends on what's typical. And I said tease out. I meant to say control for other factors. Like there might be some weather-related event or some industry-specific non-government policy-related shock that hits Massachusetts or California especially hard. California might have a structurally higher unemployment rate because their benefits are more generous. Europe has a structurally high unemployment rate, maybe partly for that reason. So I don't know what the baseline should be. Like, is California's unemployment rate of 5.5%? Is that intolerably high? Should policymakers be doing something, or is there something about the structure of their economy that
makes that normal.
That results in unemployment settling on somewhere.
Like a $20 fast food minimum wage, for instance.
Something like, yeah, we're going to talk about the minimum wage probably doesn't help on it may not hurt employment. The jury will probably always be out on that, but it almost certainly doesn't help unemployment if your goal is to get it down.
So frequently we'll cover policies that get rolled out state by state level that we find ludicrous and bad for the economy. And California's fast food minimum wage is one of them that we've loved to criticize over the last several years. President Trump proposed a new variable in the housing market yesterday. And I'm going to try and control Marc here because Marc gets especially, I think, upset about these types of policies.
Because I'm a free market fanatic.
Especially when they come from Republicans, I think.
Because I expect more from them.
Precisely.
I've given up on them, but I used to expect more from Republicans.
Precisely.
Yeah,
Marc, I think, holds Republicans in particular to a very high bar when it comes to
because
policies.
I used to give them money because they were a free market party. Now I want it back.
Yeah. So the president proposed yesterday the idea of preventing large institutional buyers from being able to purchase single-family residences. Okay, let's just take that policy on its face. It is not a new idea. It has been floated among many circles and many politicians for years, although primarily from pretty far left-leaning politicians. I've heard this echoed from Bernie Sanders and Elizabeth Warren for years now, and it is being proposed by the president at this point in time, which, again, maybe not surprising given the populist push within the Republican Party right now. I don't really want to get into the politics.
Yeah, that's fair.
But not surprising, I don't think. Let's talk about the merits of the conversation, though, because that's where I want to go to, because it's a pretty clear line that I think is trying to be drawn here on the factors that affect prices, which is if you want to bring prices down, generally speaking, you can find a way to lower demand or you can increase supply. Is that the basic fundamental of any market? And the idea here is, well, this is a pretty easy way, a pretty populist way to hit at demand. So why do you view this as...
I don't. Why would you... my first reaction was that's probably anyone who's ever looked at institutional activity. Institutional activity means Goldman Sachs and Blackstone and others buying single-family homes. Let me say, first of all, I'm uncomfortable with the idea because we bail these institutions out every time there's a market downturn, and we're bailing them out with Fed policy every day. So we coddle these institutions, then we allow them to buy up single-family homes. Ideally, they'd fail. Like a bunch of them would have gone out of business in 2008. You can tell I'm still indignant about the Great Recession and the way we coddled big banks. Now they get to go in and buy up single-family homes. Now, on the margin, they're probably not pushing up prices. Nobody's ever found evidence of that. But
it's estimated that they own about 0.5% of the total single-family market.
But, the techniques used to tease out the effects of one class of buyers versus another aren't perfect. So I find it hard to believe that on the margin in some markets they might not be putting a floor under prices or buying them up. What I want to see, Mike, is during the next financial crisis, I want all these institutions to fail. I don't want to friggin' bail them out again. And I want all these houses to come on the market and sell for pennies on the dollar. That would make me feel better. That is a first best solution would be just let the market work, not start to pick and choose who gets to buy houses, who doesn't, then who we're going to bail out during the next crisis, which they brought on in the first place. It's one damn intervention, and forgive me for using the radio version of vulgarity during my little diatribe here. But one intervention begets another. And if I sound like Rand Paul, it's because I'm trying to. He's absolutely right with respect to this stuff. Government's just got to stop futzing with things because it just creates more problems for government to step in and solve.
So, one, I go back to my same thesis. Americans don't want cheaper houses because if you make houses cheaper, it means that the value of your current home goes down. We keep seeing this over.
I want that though,
because I want to sell my home someday. I
Someday.
want my kids to have a more valuable home. Like we see this in the way people vote over and over again.
And some of us who plan on staying in our homes for a while
don't care about the value.
Certainly not today. I want some appreciation. Ideally, I'd like to recoup some of my. I don't want to. Yeah, well, the word investment was on the tip of my tongue, but I'm not sure I think about my house that way. I think about it as a source of income. I'm paying myself rent. Go ahead. Sorry.
Suffice to say, I don't think we did this story justice yet. I think we have to come back to it, but we're hard up against a break. We're going to take a quick break. Wall Street Watch is coming up next. Then I want to continue to debate this topic of should large corporations be able to buy single-family homes? Is there some merit to what the president is talking about, and what would be the effects on the housing market? That's next on the Financial Exchange.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001. Or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
But we can't add more hours to the day. We do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing.
So with a married couple, you do have more options than as a single person, but with a married couple, your home is not at risk because the community spouse living in the home is allowed to keep the home. Doesn't matter the value, as long as they're living there, it's not countable and non-lienable. They also give the healthy spouse about $135,000 to keep. It's not a lot when you think of the big picture, but all the rest of the money would be at risk, but at least a quick last-minute way of protecting all those other dollars, all over and above that $135,000, would be to basically transfer the assets, those excess assets, to the community spouse, which, by the way, is not a disqualifying transfer, so no 5-year waiting period. And then once that community spouse gets those assets, depending on their age, they can buy what is known as a Medicaid qualifying annuity. These are special annuities. They convert the excess assets into an income stream, and then it's no longer an asset keeping the community spouse over assets. Then the community spouse and the sick spouse are under assets, and they're eligible for Medicaid.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan at 866-848-5699. It's called Long-Term Care Planning for Procrastinators. 866-848-5699. Or if you prefer, you can simply go to their website, legalexchangeshow.com, and request it there.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After yesterday's pullback, markets today are mixed as traders digest jobless claims data and ready for tomorrow's all-important jobs report for the month of December. Right now, the Dow is up 0.3% or 143 points. S&P 500 is now completely flat. NASDAQ off by 0.5%. or 122 points lower. Russell 2000 is up 0.7%. 10-year Treasury yield up 4 basis points at 4.179%. And crude oil up 1.5% higher, trading at $56.84 a barrel. Several defense stocks are rallying after President Trump called for a $1.5 trillion defense budget in 2027, a significant increase from the $901 billion approved by Congress in 2026. Lockheed Martin and Northrop Grumman are up by 7%, while RTX shares are climbing over 3% higher. Meanwhile, Applied Digital stock is jumping 14% after the AI infrastructure company beat earnings expectations for its most recent quarter and also saw its revenue roughly triple. Elsewhere, the maker of Modelo and Corona, Constellation Brands, reported lower quarterly sales and profit as customers continued to buy less beer. However, the results did beat expectations. Shares are up by 6%. According to Bloomberg, China plans to approve some imports of Nvidia's H200 chips as soon as this quarter. Nvidia shares are down by 1%. CrowdStrike announced that it is buying identity management startup SGNL in a deal valued at nearly $740 million. CrowdStrike shares are down by 2%. And Apple shares, they're off by over 1% following news that JP Morgan Chase has reached a deal to take over the tech giant's credit card program from Goldman Sachs. I'm Tucker Silva, and that is Wall Street Watch.
So back to the housing market for a moment again. Yesterday, the president floated the idea of banning large institutional buyers from owning single-family, or I don't know if it's owning or buying single-family homes. I think it might have been buying single-family homes.
Yeah, we're not going to force them to
divest. I would think not. That'd
That'd
be an extreme. That'd be an extreme measure.
Although that would be interesting.
You have until December 31st of this year to divest of all of your single. Yeah, that'd be pretty messy. So, in the aggregate, this is a government cost-free method of reducing demand in the housing market. Right? It doesn't cost the government anything to say, hey, if you are a corporation with more than X number of dollars or employees or however they determine large corporate buyer, to say you can't do this anymore. So I'm guessing it appeals from that perspective. It certainly appeals from a populist area where, okay, if I'm trying to buy a home and I lose out to Blackstone, I probably don't feel all that good, and so I might be in favor of this. I don't know what it does to home builder sentiment, but it can't be anything good. Right, we've seen the likes of Lennar and other big home builders as of late saying, hey, we are really pulling back on home building because we just do not see any good scenarios for pricing. If you immediately eliminate one of the large buyers of homes, then that's not going to help with sentiment. You might have a slower pace of home building. So I'm not convinced that this method immediately brings down home prices. I would be very hesitant to believe that that's the case. The other thing I'm just wondering about is I wonder how big of a role these corporate institutional buyers of homes actually played in times like 2010. Because that's what immediately came to mind for me is I know plenty has been, criticized by what was the firm that Mnuchin led back during the Great Financial Crisis that was buying up properties like crazy on for pennies on the dollar. I don't recall. But
Sorry, I don't remember.
It certainly led to some stability back in the 2010s of, hey, here is a buyer that actually has cash to go out and buy homes, whereas the overall market was in free fall. And so I do just wonder, hey, by removing a potential buyer of homes, do you create more, I guess, more volatility and more downward pressure? Is it a less liquid market? And I think the answer would have to be yes. If you're removing a potential buyer, you are creating a less liquid market for homes. Do I think it's the worst idea in housing? No, I guess I think this is less bad than, say, the government subsidizing the cost for mortgages or something else that's been floated around there, artificially bringing down interest rates for buyers for a period of time. I think this is less irresponsible than that idea. But we keep going back to housing affordability and what are the problems? And the problems are that we don't build enough homes for the number of people that want to own them. And so I go back to this over and over. We need less regulation in housing, not more. This is more regulation in housing. I don't think it fixes any of the problems that we're experiencing. I don't think it leads to more home construction, which is what we ultimately need. And if you want to make homes more affordable, then the method is create the conditions for a freer market where builders want to build more homes.
Yeah, I mean, I'm looking frantically here for recent
some data to support
academic
an argument,
quality, peer-reviewed studies on the impact of institutional buyers, and the results are, as they often are with statistical analyses, ambiguous. It's not even clear what your best guess would be, what your best guess should be if you were told a large potential buyer will be removed from the market, because you can't just, Paul Lane and I were talking about this yesterday, when you're analyzing the effects of any policy or the action of any one participant in a market, you can't just look at that in isolation because other things are changing too. If we did remove institutional buyers from the market, it's possible others, sovereign wealth funds would step in, or some difficult to anticipate change in the way other participants in the market behave would take place. So it's very hard to say ex ante, beforehand, how things will turn out. So I don't really know, Mike. I mean, the free market Ayatollah in me says stop messing with the decisions of individuals, whether that be corporations or people like us, and just let markets work.
Right.
If you think houses are unaffordable, then make it easier for people to afford everything by, say, shifting the tax burden from income to consumption or something. Now, that would push up the prices of some goods, so maybe that's an imperfect solution. So the economic prediction, what prediction you should make if you're using an economic framework here is just not clear to me, nor is it clear to some of the research that I'm, again, frantically scanning here. No.
Because, I mean, this is added
but you're
regulatory burden.
Adding rental supply. By letting institutional investors buy, they're adding rental supply. So it helps renters.
But my point would be blocking the institutional buyers, to me, is additional regulatory burden in a housing market that arguably already has too much.
And also, how do you do that legally? How do you tell one class of buyers you can participate in this market, but another class of buyers who happen to be corporations, which under the law are afforded the same privileges, protections, et cetera, right? Corporations, whether we like it or not, do possess the same economic rights as people. You can't stop them from going. So how exactly, what are you going to, and doesn't Congress, the president can't, I know the
Congress would have to do this.
Maybe you like the way the president rules like Henry VIII, maybe you don't, but I mean, we're not a medieval monarchy here. You're going to have to get the people's proxies, i.e. Congress people's
Which, by the way, would be so fascinating because, again, the biggest supporters of the policy like this have been the likes of Bernie Sanders and others of that economic mindset. And so the voting block on something like this, to me, would be absolutely fascinating.
No, you're right.
I personally don't think it goes anywhere, but it is very much a populist economic proposal. And frankly, I just don't think, if you're going to get serious about solving the home affordability problem, I don't think there's any evidence that this does it for you. I don't think there's any evidence that this improves any of the situations in the intermediate term. I think it just is probably something that helps you at the voting booth a little bit, because it is probably a pretty popular policy to say, nope, no corporations can buy new homes. You won't need to be competing with Blackstone when you go submit your offer.
Again, but think about what that does to the rental market. I mean, there are people who have benefited from institutional buying. And as you said, during the financial crisis, which is when Blackstone initially stepped in and scooped up thousands of homes that were in under distressed circumstances, that provided a floor for the rest of us in some ways.
It did.
So beware unintended.
Arguably prevented more foreclosures during the early 2010 stage was these institutional buyers buying homes at foreclosure and at distressed sales.
And I'll say again, Mike, this is a government that governs least, governs best types. I know I'm a wild-eyed libertarian here, but the last resort should be some heavy-handed government intervention. Maybe we're at that point because people think we've tried everything else, or maybe, like you said, it's an election year and politicians are looking for expedience.
Let's take a quick break. When we come back, one more proposal from the Trump administration, this time about functioning of the stock market and specifically with defense companies. We'll be talking about that next on Financial Exchange.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. This is a message for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. That's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is, there may still be meaningful legal options available, even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look-back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, Call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Hey, if you missed any of our shows this week, you can find them on our YouTube page. We stream the show live every day, but also archive every hour in all of our most newsworthy interviews and discussions. Go to YouTube, search for the Financial Exchange Radio Show, and hit that subscribe button.
President Trump saying he will not permit dividends and stock buybacks for defense companies. I read this headline and I saw some coverage of it yesterday, and I think it was a little bit miscategorized. What he was really saying is that many of the defense companies that he has grown frustrated, he does not believe have invested enough in their ability to quickly roll out new products for the military and to more quickly, quote, defense companies are not producing our great military equipment rapidly enough, and once produced, not maintaining it properly or quickly. So he's using this as a seeming threat or incentive to get these companies to invest more heavily back into themselves, rather than saying, hey, I want to permanently prohibit defense companies from being able to pay dividends or stock buybacks, so, which I view as slightly differently, because when I viewed that initial thing, I said, okay, what are you doing here? And are you going to do the same thing for Amazon or SpaceX or other major companies?
He's on a Henry VIII trip. Forget about that for a second. I mean, the legality of that is something I'm not qualified to comment on, but
sure.
If that's legal, then I don't know what the hell being an American is about. That said, why would you buy the share of any company for which the political authority can limit returns to shareholders?
Yes.
The only reason you buy a stock, some people buy it in the hopes of it going up, and then you pass it along. You pass the bag along to a greater fool. That's a little bit unkind, but some people don't really care whether or not there's great earnings potential in the future. They just think people will want it more in the future than they do today, and the price will therefore go up. But most of us buy companies because we're going to get cash back.
They think their profits are going to grow, and therefore the company will have a better ability to pay back a larger portion of the profits.
That payback could come in the forms of increased earnings per share, which is what share buybacks do, or of course dividends. Mm-hmm. If you prohibit share buybacks and dividends, why would I buy a defense and industrial company effectively? I know they're going bonkers today because while he's taking something away with one hand, the president is, or seems to be, or wants to.
It's floating a 50% increase to the...
A massive increase, none of which you'll be able to share with shareholders, though, because you can't increase your dividend and you can't increase repurchases.
So, one, I do believe, like you said, that this would most certainly require an act of Congress to actually prohibit. That said, the president has shown that he has quite a bit of influence. I look at this and compare it to the agreement that he struck with Nvidia to say, hey, we are going to pay the U.S. government 25% of chip sales from China as a kind of voluntary contribution. If the president says, hey, we are going to review defense contracts with Raytheon, Lockheed Martin, and all of these unless they eliminate their dividend, then...
And take our business where?
Right.
What's
I don't know
threat?
where else you go to. There is no other defense company, I think, is the difference here.
I assume they'll comply just to get him off their backs.
Yep.
But again, as a shareholder, that's not a very appealing problem. How do I recoup my investment? How do I even calculate what my reward is likely to be?
General Dynamics, Lockheed Martin, and Northrop Grumman each fell around 3% following the president's comments. Like Marc mentioned, there is also a carrot there with a massive increase to the defense budget being proposed by the president.
Yeah, now that I think about it, though, I don't know how much of it does alleviate the sting of not being able to benefit from any of those revenues or eventually earnings if I can't get them in the form of a dividend.
To me, it wouldn't, but I also wouldn't fundamentally take the president's statement about this seriously.
Oh, okay.
I don't think
Well,
that's
then how
heartwarming or
So
anything,
it's like,
but I wouldn't take.
So
any
it's just
of this
supposed to be like
seriously.
entertainment. I'm not supposed to actually process any of this for investment
Watch what I do,
purposes.
not what I say.
Okay.
Is my takeaway. Folks, new guide available from the Armstrong Advisory Group here in January. It is the subject of one of our most asked about questions. Hey, when it comes to Social Security and Medicare, what do I precisely need to be prepared for if I am looking at taking one of them or both of them in the new year? If I am facing this decision down, if I'm 60 or older and I'm looking at, hey, how does this stuff work? What do I need to apply for Social Security? What documents am I going to be required? If I was divorced or widowed in the past, what sort of benefits might be available to me that I'm not familiar with? This is the guide for you. How to apply for Social Security and Medicare. It's available for free. You can request it by going to armstrongadvisory.com, or you can call us at 800-393-4001. But again, this guide all about Social Security and Medicare, how to file and the benefits you're entitled to. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I don't know what Goldman was doing yesterday that got the attention of every reporter out there, but they simultaneously say that high valuations are putting equities at risk, and they see consumer stocks gaining amid AI valuation worries. I know these are just the headlines.
Well, they could both fall, but consumer stocks could do relatively better. Is that what they
I
meant?
think that's what
I'm
are.
being a little generous here, but
yeah,
I could see those two things not being totally contradictory.
I just find this to be, like day late and buck short. Like, yes, U.S. stock valuations are quite high, and everyone should be concerned about it, and I guess so is Goldman.
Well, yeah, you sound like an idiot if you just dismiss them and maybe we could pick this up because it's a big topic, but you can't assume that people will be willing to pay more for future earnings, the pace of that willingness to pay, the growth of that willingness to pay, which is the P in PE, will outpace earnings indefinitely. Said differently, you can't believe PE ratios will go up and up and up forever.
So is this just something that every major bank has to say, otherwise they look like an idiot when the market crashes?
Like I work for you. If I came into you and said, Mike, I don't think these elevated PEs are a problem. I think they're just going to continue to go up indefinitely, maybe for the rest of my career until you stop paying me. You'd say, well, you're not a serious person. That's lazy and stupid.
Yeah.
So yes, I think that it's a perfunctory. It's a gesture.
I guess my point would be that it's not worthy of publishing.
Well, it's Goldman said, is it so?
If you are unfamiliar, stock market valuations are exceptionally high today. That does not mean that the markets will necessarily crash tomorrow. They have been exceptionally high for an extended period of time, really since 2023. Historically, when they have gotten as high as they are, it does not spell terribly good news for what I deem to be the intermediate term.
Yeah, expected returns should be a little tempered. That's all. We're not saying anything's going to crash. Just expect lower returns than the 15% we've had over the last 10 years.
Good summary. Glad we covered that for the 10,000th time in the last 2 years. Quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back, folks.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide available this month titled How to Apply for Social Security and Medicare. Mike, when we talk about actually determining when to apply, there are a few different factors that go into it, but I think really the specifics of, hey, if I want money at date X, when do I apply is kind of at the crux of this.
Oh, sure. And, oftentimes when you go to apply, they will actually tell you that they're backdating your application to the date that you apply. And so your first check might include a few checks of Social Security. You do have to be specific about when you request the actual start date. The good news is you do get a prorated increase for, we talk about this in years, but you do get a prorated increase for every month that you end up delaying your Social Security benefit, and you can be highly specific about when you actually want the income to start.
How does one go about determining what age they actually should start Social Security?
Yeah, look, every actuary out there will tell you this is all a life expectancy question and calculation. I'll tell you there's more to it than that, but it is highly specific to each individual. When am I retiring? When is my spouse retiring? When do I actually need this money to kick in? And what is my backup plan for covering my expenses if it doesn't kick in right away? So yes, life expectancy, a major factor in the decision, but there are other questions to be answered as well.
Our guide is titled How to Apply for Social Security and Medicare, and the ways that you can request it, there's 2 of them. First, you can call 800-393-4001. The second way, you can go to armstrongadvisory.com. Again, that phone number is 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. From the other law attorneys at Cushing & Dolan, here's something you need to hear. Most people think long-term care planning is something they'll get to someday, until suddenly someday is today. When a spouse or parent needs nursing home care and no planning was done, the costs can be overwhelming. Cushing & Dolan are elder law and estate planning attorneys who help New England families protect their homes, savings, and retirement, even when a health crisis comes out of nowhere. They've just released a new guide called Long-Term Care Planning for Procrastinators. It explains what options may still be available and what steps you should take before writing that first check to a nursing home. If you've been putting this off, or a loved one needs care right now, time matters. Call Cushing & Dolan today at 866-848-5699 to get your free guide. That's 866-848-5699. Or you can request it online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any decisions. Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Thursday. Welcome back to the Financial Exchange. We've got a mixed market at the moment with the Dow up 215 points, closing in on 0.5% up, whereas the Nasdaq's down nearly 0.6%. S&P is as flat to flat as you can get, currently up 0.16 points. That's what I'll say about the S&P 500.
I can't see it. Sorry.
Yeah, I hear you. We have a jobs week here on the Financial Exchange. Yesterday, we got news on the job openings labor turnover survey. That report has been showing continued weakening, but perhaps just normalization in the labor market. There are now approximately one job open for every one person looking for work, which is a fairly normal ratio, but is far away from what we saw back in 2021 or two. I don't remember exactly when there were 2 jobs open for every person looking for work, and you would drive by the McDonald's and see the signs for signing bonuses and all sorts of fun stuff that we hadn't seen in a generation in the labor market. So clearly weakening there. The jobless claims that we received this morning came in at 208,000 over the previous week, a slight uptick from where we were the last week, but at a very low and, frankly, not a concerning level. These probably don't start to look concerning unless you're over 250,000 a week, and we're pretty far away from that at this point, so I'm going to sweep that one under the rug and say that it doesn't matter at this moment. Tomorrow at 8:30 a.m. Yeah, at 8:30 a.m. we will be getting the monthly jobs report from the BLS. This is a combination of two different surveys, one of households that gets you that unemployment rate, among other data, and the other of businesses that gets you the pace of job hiring. Expectations for this coming report, which will be reporting on the month of December. The unemployment rate expected to come in at 4.5%, a slight downtick from the 4.6 we saw in the previous month, and the pace of job hiring continue to come in between 70 and 80,000. So we will see what we get and certainly be covering it on the show tomorrow. Anything else to add for you, Mark, on the state of the labor market?
You raise an interesting question about the unemployment rate and how will we? I forget how you phrased it, but what stuck in my mind is how do we know what the right unemployment rate is? Well, the unemployment rate in 2023 went down to 3.4%, way below typical historical experience, and that was accompanied by high inflation.
Mark, I was thinking about this when we were speaking this morning. I think, we were talking about unemployment, not on the show, but I was thinking, what is the answer to, hey, what is the ideal unemployment rate?
Okay, well, I was going to try to answer the question.
And I think the answer depends on who you're asking. Because for employees, the answer is the best labor market you had seen in a lifetime, in a generation, was the one we got 3 years ago.
The way the economists at the Fed would, and what most of us care about, and I don't mean to diminish the experience of somebody who's underemployed or, God forbid, unemployed, and who looks at that and says, well, that's partly my experience and I want it to come down. I'm just talking about this as sort of
you got it.
Detached sort of
what is
research.
The best unemployment rate
so
for
they
society?
Would say, the economists at the Fed would say, and this is important because they determine monetary policy. We all care about what interest rates are going to do.
Sure.
They would say it's the rate that doesn't push inflation up. And that rate, and this is something we were talking about internally this morning, that rate changes over time as the structure of the economy changes.
We know one thing, it certainly was not 3.4%.
No, it wasn't. That was unnaturally low.
And drove up inflation in part.
And was related to the rise. Demand was too hot. That pushed unemployment too low. The Fed was at least partly responsible for that. At the very least, they failed to push against the forces that were causing demand to run ahead of the economy's productive capacity and thus pushed up inflation. In the late 1990s, unemployment went down to the 4s. I forget exactly where it bottomed. It was so low that many people thought the Fed should be raising rates. Greenspan correctly, in retrospect, identified something going on the supply side of the economy. The internet
productivity boom from the internet?
Yeah, the productivity boom. Yep. And he was early there. He also got a little bit lucky because it took years to document that that's actually what had happened. We don't know what the right or natural or non-inflationary rate of unemployment is today. It might be 5.5. That could be why inflation remains elevated. So I nobody wants higher unemployment because that has real human costs. But someone who's setting monetary policy doesn't want to push unemployment. As callous as it sounds. And think about when the Fed has to cause recessions to get inflation down. It's willing to make that trade-off. Economists have a name for that trade-off. It's called the sacrifice ratio. Again, it sounds glib and unsympathetic, but you can't push the economy too hot because inflation has victims too.
The other major story of this week has, of course, been Venezuela and what is happening with its oil, what is happening with Nicolas Maduro. Will there be some sort of shift in power in Venezuela? Many of those questions remain unanswered, but we're starting to get more and more written about the situation with U.S. domestic oil production, what it could mean if Venezuela's market is more open to U.S. companies for all sorts of drilling and things along those lines. Fact of the matter, the state of play today, the U.S. pumps more crude oil than any other country in the world without Venezuela.
13 million barrels a day, right? Is our output 13 million a day?
I think that's about right.
It's come down a little bit over the past year, but 12 to 13.
The recent trend in oil production has been shrinking rig counts because at the prices that are currently being paid, you are not really terribly profitable for a lot of these oil companies for them to continue to drill new rigs and get oil out of the ground. For reference, oil prices are up a bit today, but we're still below $57 per barrel. And this is not my own phrasing, but I found it really interesting. A lot of it, if you're looking at the Venezuela situation, a lot has been compared to Panama in, what was that, like 89, excuse me. And it was pointed out that, historically...
Just Cause was 89? You're talking about us removing Noriega.
Yes.
I think that was 89.
89, okay.
Because, Bush was president. Yeah, it wasn't 90 because we were dealing with Iraq at that. Yeah, it was 89. I think it was 89.
It'll be a trivia question 3 weeks from now. God
forbid we just Google it. It was supposed to be stammering for
See, that's what I hate about the internet. Is we used to have these fun conversations like, okay, well, let's see, I was in middle school when it happened, so therefore, now we can just Google it and get the answer instantaneously. Nonetheless, a lot has been compared to that period. Yeah,
that we don't have to fumble around for.
It is a bad thing because now kids don't know how to talk to each other. Yeah, it's a bad thing.
With all these facts hanging around, nobody can communicate anymore.
Yeah. Yeah,
is that what you're saying?
I used to just be able to make up conspiracy theories. Now I have to go to the internet and find them myself. I don't like that.
It's a bear market for BSers, if that's what you mean.
I love the conversation of fumbling around what year an event occurred. Yes, I prefer that conversation.
Yeah,
as opposed to just looking it up.
I'd rather grope around in the dark for 3 hours.
Yes.
That's my memory fades.
100%. 100%.
Listeners love that. Neither one of these guys has any clue what's going on.
The point that was made was that historically when the United States has done something like we did in Venezuela, it was oftentimes slouted as, hey, this is about democracy and restoring democracy in the region when everyone knew it was all about oil. And this is the first time where you look at this one and you say, I'm not really sure this is about the oil. I think the president certainly believes it's about the oil. I think he, views oil as critical to the global economy. Frankly, I think that viewpoint is a bit outdated in today's economy, given how much oil the U.S. produces.
Well, it's an election year, so there's a little bit of an election impetus there.
But this is the first time where you look at it and you say, okay, they're not saying it's about democry at all. Right, the administration is not talking about that whatsoever.
You gotta love the candor.
You want the oil.
He dissed the opposition.
And reality, the advisors around him, I'm sure, are well aware that, hey, we don't really need the oil for the United States to continue to be successful. In fact,
no, we'd rather
additional oil might not be great
the oil
for
patch
the US
likes
economy.
higher. You talked about it, and we've all seen Landman now. We know what the oil patch likes.
And so, with that in mind, yes, I do believe the president views oil as critical and securing these that resource as pretty important reason. But you do wonder, like, how much more of this was really about a display of American military power, about rare earth materials, or just securing a relatively close by enemy is, I think, an open question. I just find it fascinating.
I like the preventing our potential enemies, China and others, from getting their hands on Venezuela. I hadn't thought about that angle at first when I heard about it wasn't really an invasion. I don't know what you call that operation. But anyway, when I first heard about it, I thought, oh God, here we go again. The first 48 hours looked great because of our superior military and tactical capabilities. But the tough part is locking those gains down. I hadn't appreciated controlling their oil to make sure it doesn't go to potential if we do have a conflict with China or Russia or both. Russia's energy independent or could be, but with China, we'll be very glad that we remove this source of fuel for the Chinese military. I hadn't thought about that. The president's not saying that. He can't, I guess.
Sure. I think, but yeah, the further away we get, the more clear it becomes that in the short term, this probably does not do much of anything to the oil market.
Well, look at the price of
oil hasn't moved. It might put further caps on how much it can appreciate, but the idea of Exxon or even Chevron, who's already in Venezuela, dramatically increasing oil supply in the global market anywhere in the next 5 years, to me seems incredibly unlikely.
We don't know what the rules are going to be
right
in Venezuela.
Quick break. When we come back, a little bit of trivia here next on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. If you've been dreaming about a getaway that feels far away but easy to get to, It's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Retirement comes with a lot of exciting freedom, but also with some permanent decisions. 2 of the most important ones are when to file for Social Security and how to set up your Medicare coverage. Claim Social Security too early and your monthly check may be permanently reduced. Missing Medicare enrollment deadlines might mean significant penalties and gaps in coverage. We have a new guide available called How to Apply for Social Security and Medicare. It breaks down when you can apply, what information you'll need, and how these decisions fit into a smart, coordinated retirement plan. Get your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. 19 states as well as 49 cities and counties are increasing their wage floors to at least $15 per hour for some or all employees. However, the federal minimum wage will remain at $7.25. So, trivia question today. Which president introduced the federal minimum wage? Once again, which president introduced the federal minimum wage. Be the fifth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
We're turning to China now, but now that I'm going to go back to Venezuela for a moment. Did you see the reporting that there was a Chinese delegation of diplomats in the capital during the U.S. raid in Venezuela?
I did not see that.
Yeah. So I don't know. I just found that interesting. Apparently they put out a statement like, not exactly saying you shouldn't do this because they're not going to say that, but like, hey, a heads up to our diplomats would have been nice. I find this all interesting in the context of.
Oh, sure. Anything else you'd like us to tip you off on?
China is depriving Japan of rare earth supply again, based on a comment made by leadership there about Taiwan. And I do just openly wonder, there's this deal that the president has been working on, Nvidia's ability to sell some of their semiconductors over to China. These would be the H200s. This is at least one generation old of semiconductors. But pretty soon it'll be two generations back of the latest and greatest semiconductors. But again, I've been kind of openly pondering since the events in Venezuela, will there be any retaliation from anyone? Not that China and Venezuela are terribly close these days, but the low-hanging fruit and the method that they have been using all over the course of the last year has been rare earths, and they're clearly still willing to flex that muscle, at least with Japan. So I don't really have any big opinion on whether or not China is going to actually buy these Nvidia H200s. I think part of it was just getting a deal approved to appease the folks in Washington. And so at least what we can say right now is that there has not been any seeming step back in relations between the U.S. and China as of late. But I don't think there's much more of a story.
Well, we've got a little more leverage now if we control the flow of oil out of Venezuela. So
a bit, but again, like China has plenty of places they can buy oil.
That's true. It is a global market.
Like it's really not a problem for them to go somewhere else to Russia and buy their oil, or to go to the Middle East and buy that oil instead. It's still pretty darn cheap. It's probably not as cheap as Venezuelan oil, but it's still pretty darn cheap, I think, is my overall conclusion on all of that. So again, I'm not sure how that affects the overall geopolitical situation.
Did you see the listener email regarding share repurchase restrictions on defense contractors paying out dividends? It's a very well written, and seemingly, I know nothing, so to me it seems authoritative. It comes from Don. During today's show, you seemed to question the legal authority of the president. I was questioning it, but without any basis. I just didn't think the president could tell a publicly traded company what they could pay their shareholders. But the listener points out, and we haven't verified this, but it seems authoritative, so let's take it at face value. Dividends are included in the definition. I'm paraphrasing the listener Don's email a little bit here. Are included in the restrictions on allowable costs that are detailed for the Department of War and the cost accounting standards. Again, I'm paraphrasing a little bit here. So this listener, again, Don, worked in finance at Raytheon, and he claims, again, we haven't verified it, but it sounds believable to me upon kind of reflection, and I probably should have thought about this, that the federal government can constrain defense contractors. Now, if you stop contracting with them, I suppose, I don't know who else they would, who else they'd be making product for. Maybe the circumstances would be different. But
they apparently can do so.
According to this, and it does make, when you think about the relationship between the Department of Defense and defense contractors going back to World War II, and the cost plus arrangements we imposed on Ford and others, it does make sense.
It would be truly fascinating, though, at a time
thank you, Don.
when... Yeah, thank you for emailing, Don. That's informative, and I appreciate it. It would be fascinating at a time where clearly there is additional demand for military resources to see the stocks not perform terribly well. Because to your point, right, if you are talking about investing in a company that is barred from paying a dividend or share repurchase, I think that would be a pretty high barrier to entry for some investors.
Yeah, in some ways, these are quasi-public entities.
Yep.
They have one big customer, and the only specs they care about are the specs provided by that customer. So, maybe my fanatical free market approach to things needs to be sort of tempered in light of the unique position of defense contractors.
Yeah. But
I won't.
You won't do that? Okay. Let's see. What do we have here that I want to cover next? Yes, Warner Brothers, the gift that keeps on giving. Warner Brothers board just put out a notice to shareholders that they would recommend against Paramount's hostile takeover bid. What makes this piece additionally interesting is they had previously thrown out there some questions about the trust that was going to fund the eventual purchase of Warner Brothers and be a backstop to it. Paramount then removed any of that concern, and nonetheless, Warner Brothers has come back and said, yeah, we don't care. We're still not recommending shareholders go with this purchase. We still would prefer Netflix. Thus far, neither of these companies have increased their bid. My guess would be that might be what comes next, but first thing is going to be this hostile takeover bid where shareholders will be asked to vote on it, so we will see where that goes. Quick break, Wall Street Watch, coming up next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushman Cushing & Dolan with your Financial Exchange legal quick tip of the day. And today we're talking about last-minute nursing home lessons that can help save your assets. Todd, more and more people are providing in-home care for their loved ones. Is there anything a care provider can do that would be beneficial to them or the family?
So if you're already providing care for an individual at home, and more people, as you said, are in fact doing that, the best thing to do is to set up a personal care contract, right? A personal care contract is something that allows you to get paid by your family member, and as long as you report it on your income tax return and prepare a personal care contract, make sure you get an elder law lawyer to help you prepare that contract because it's got to be done right. But if you do those two things, get the contract and provide the care and put the income on your income tax return, the transfers are non-disqualifying transfers. So even if you don't make the 5 years, those dollars that you're moving will not need to be returned and they will be protected. Also, while you're doing that, set up the trust and get the 5-year clock started. Put some assets in because you just never know if you're going to make it or not, and you would always want to have that 5-year clock running to protect your assets.
Cushing & Dolan has written a brand new guide, especially for those of you who have put off doing your planning and are now faced with a last-minute nursing home situation. Request this brand new guide from Cushing & Dolan. It's called Long-Term Care Planning for Procrastinators. You can call 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, simply call 866-848-5699, or get it from their website at legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After yesterday's pullback, markets today are mixed as traders react to the jobless claims data posted earlier this morning and prepare for tomorrow's all-important jobs report for the month of December, due out at 8:30 in the morning. Right now, the Dow is up 0.6% or 300 points higher. S&P 500 is down only 2 points at the moment. NASDAQ down by over 0.2% or 158 points lower. Russell 2000 up 0.6%, and your Treasury yield is up 3 basis points at 4.175%, and crude oil up nearly 2% higher now, trading just above $57 a barrel. Several defense stocks are rallying after President Trump called for a $1.5 trillion defense budget in 2027, a significant increase from the $901 billion approved by Congress in 2026. Shares in Lockheed Martin and Northrop Grumman are up by 5%, while RTX shares are climbing about 2% higher. Meanwhile, Applied Digital stock rallying 15% after the AI infrastructure company beat earnings expectations for its most recent quarter and also saw its revenue roughly triple. Elsewhere, the maker of Modelo and Corona Constellation brands reported lower quarterly sales and profit as customers continued to buy less beer. However, the results did beat expectations. Constellation shares are up by 4%. According to Bloomberg, China plans to approve some imports of Nvidia's H200 chips as soon as this quarter. Nvidia shares are down 2%. CrowdStrike announced that it is buying identity management startup SGNL in a deal valued at nearly $740 million. CrowdStrike is down by 3%, and Apple shares are off over 1% following news that JP Morgan Chase has reached a deal to take over the tech giant's credit card program from Goldman Sachs. I'm Tucker Silva, and that is Wall Street Watch. And the trivia question we asked in the previous segment was, which president introduced the federal minimum wage? That would be FDR. Bill from Lebanon, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Bill, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
There's some anticipation of a big IPO this year after, frankly, several years of not much in the way of IPOs. We saw a hot new listing year in 2021 during the craze of the SPAC craze of 2021. That didn't end up going terribly well. But big name companies like SpaceX, OpenAI, Anthropic, all rumored to maybe be considering going public this year. And frankly, this has been a trend for the last several decades. This is nothing new, but fewer and fewer companies have been publicly listed. I don't know if you have a time frame for when that kind of peaked, Mark. When did when were the most U.S. companies public? Was that late 90s would be my guess, before Sarbanes-Oxley?
Yeah, we should keep speculating
yeah,
about the
I'll
years.
use Ritter's an academic. He used to be in Florida. I think he's somewhere else now.
Interesting.
But we've referenced this before. At least I have. It was probably years ago, though. Even I don't remember when. But yeah, there were several hundred throughout the 90s, really, peaking in the mid-90s, waning a little bit, never really recovering to those heights. The highest they've been is 311, and this was in 2021, and then it's slowed to a trickle. So yeah, dramatic slowdown, Mike, from the last century.
And there's a number of reasons. One, just the cost of being a public company have increased over time. All the accounting things you need to do, the audits that you need to do in order to be public are costly, especially for a smaller size company, and the ability of private funds to keep companies private for longer has grown over a course of time. So private equity firms. Allison points out something that I wouldn't have really thought of, but a real IPO boom, she says, this is Allison Schrager from Bloomberg, that is, could spell trouble for private equity. And I have a tough time making sense of that, because IPO is one of the methods that private equity actually realizes the gains on their built companies that they have acquired at a smaller, it's their liquidity. And so why in her mind could that be a problem for private equity investors?
Well, as the name suggests, these are privately traded securities owned by pension funds, other institutional investors, and maybe wealthy investors too. These are valued according to what the accountants and auditors who work for or are contracted by private equity managers to assess.
It's an important consideration, right? Like, the reason we know that Nvidia is worth however many $1 trillion is because we know there are a certain number of shares outstanding, and they trade all day.
We all say so.
Yeah,
it's
that's not how firms work that are
liquid and
owned
transparent.
Privately.
Private equity firms are valued at what the manager effectively decides. Schrager's point is, if they decide to use the IPO channel to exit, which every private equity manager has to do. They don't want to own a company forever.
Mm-hmm.
They
doesn't need to go by IPO,
buy
but they could sell it to any other
investor.
investor.
They could, but general, yeah.
If it's a success story, it's usually going IPO.
But that's going to be they're going to have to mark to reality. They call it mark to market when, well, that's one way anyway to change the valuation. They're going to have to face the music at some point anyway if they've been carrying something on their books at an artificially high, at an inflated, and there's nothing insidious going on. They may have just been overly optimistic, or markets may have changed.
This is a message for families who've been putting off their estate planning from the elder law attorneys at Cushing & Dolan. One of the biggest myths about long-term care is that if you didn't plan 5 years ahead, you're out of options. Well, that's simply not true. When a health crisis hits and a loved one needs nursing home care, many families panic and start writing checks for care that may cost over $10,000 a month. The reality is, there may still be meaningful legal options available even when planning starts late. Cushing & Dolan have just released a new guide called Long-Term Care Planning for Procrastinators. It breaks down what the 5-year look back really means and what steps can still be considered before making decisions that can be incredibly costly. If you're worried about protecting your family and securing your financial future, call Cushing & Dolan at 866-848-5699 to get your free guide today. That's 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Tucker likes putting stories into the stack that I'm interested in. Ford is entering the race to offer eyes-off driving technology, starting with an alleged $30,000 EV in 2028, which I'm not buying it. Plenty of these companies have said they're going to offer cars for $30,000 and don't get to that price point. What I do find exciting is I think that we are actually getting close to cars that are pretty good at driving themselves. We've seen it with Waymo and what they're able to do on those vehicles, but by all estimates, those things cost a good $100,000 to produce, and so not exactly a retail car. Mercedes-Benz has gotten there with one of their self-driving technologies, but it's very limited in terms of where it's able to go. And then the next level down, you've got the Tesla full self-driving, you've got the Chevy Super Cruise, and the Ford Blue Cruise, I believe it is. All of these are, I think they're called level 2 driving systems, where your eyes have to remain on the road, but you don't necessarily need to control the steering wheel. The vehicle will go so far as to change lanes for you and to move over when it's time for you to exit, and slow the vehicle down when it's time to exit, bring it to a full stop, start it back up again. So that's where the technology is now, and Ford's saying, hey, by 2028, we want to be able to step that up to a new level. And frankly, I would say that Ford, Tesla, and Chevy are probably the front runners today in this technology. And I guess I wouldn't necessarily trust Elon Musk's statements on the future of this, because he's been promising to deliver self-driving cars for the better part of a decade, but it does seem like we're getting pretty close to this. Does this matter to either of you? Like this piece of technology?
I'm wondering where the demand is for it. Is this something people are clamoring for? And they don't have to be clamoring for it. Well, you make long drives once a week.
Yeah, on the highway would be extremely useful for me.
But doesn't adaptive cruise control gets you part of the way there. You still have to keep your hands on the wheel.
Yeah, I found that the adaptive cruise control varies greatly depending on the make. My adaptive cruise control in my Toyota is terrible and cannot keep me in the lane, whereas my Honda is really good. So
it steers for you as well? It doesn't just adjust speed?
Yeah, it's supposed to also keep you centered in the lane.
Okay.
That's what some of these systems do. To me, I actually think that there's a consumer demand thing here, but I do also wonder about other things.
I wonder how widespread it is, though. Maybe it doesn't have to be widespread.
I think it's pretty niche based on what I've seen, because when I went out there to shop for it, it was not a sales point that the people were making that, hey, this is a really cool technology.
Look, at some point it's going to be standard. This will get cheap and easy to, and at some point, standard means you can't refuse it, but you don't have to. Like cruise control, it became cheaper to just add it to every vehicle than to discriminate and put it in only higher tier levels.
To me, where the money is, though, is not some EV that you sell to Tucker. Like, if this is truly usable, then there's massive implications for long-haul trucking, right? Like, that is one of the biggest costs of moving goods across this country is paying the people to drive the trucks around, and they're limited in terms of their hours. It is a stressful job, and this technology, if it's really usable, put into some of those semi-trucks, makes a big difference. So that's, to me, where the money's to be made on this, not on selling you, me, or Tucker a new car, which I'm buying one with some of this technology in it because I find it really fascinating and interesting. But, we will see. I do feel like we are getting pretty close, and my mind shifted on that after going into a Waymo and just seeing how, frankly, impressive it was to be able to deliver me to where I was going right from the airport without a human being there. Quick break. When we come back, a bit of Stack Roulette is next on the Financial Exchange.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. When a loved one needs a nursing home, decisions need to be made quickly. If you haven't started planning yet, get Cushing & Dolan's new guide called Long-Term Care Planning for Procrastinators. In it, you'll learn how to make smart decisions and avoid unnecessary expenses. Call 866-848-5699 to get your free guide today. That's 866-848-5699. Or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
If you've been dreaming about a getaway that feels far away, but easy to get to, it's time to think about the U.S. Virgin Islands, America's Caribbean. This is a place where you can fall naturally in rhythm with the heartbeat of the islands. Enjoy crystal clear water and powder-soft beaches, world-class dining, sailing, and unforgettable sunsets. And here's the best part. Travel from New England is easy. The U.S. Virgin Islands are part of the United States, which means no passport required and no money to exchange. Just pack your bags and go. Spend your day snorkeling, sailing, hiking, or simply relaxing by the water, and your evenings enjoying local cuisine, live music, and warm island breezes. Explore St. Thomas, St. John, and St. Croix, 3 distinct islands, each with its own vibe, its own flavor, and its own way of helping you unplug and reset. Start planning your Caribbean escape today and visit usvi.com. Discover why the U.S. Virgin Islands are America's Caribbean paradise. For more information and to book your trip, head to visitusvi.com. That's visitusvi.com.
Social Security and Medicare are oftentimes lumped together, but may be handled separately. And depending on your strategy, they could shape your entire retirement plan. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Choosing when to start Social Security has many effects, including determining the amount of guaranteed income you receive each month. Medicare decisions go beyond coverage as they can impact premiums, out-of-pocket costs, and access to providers throughout retirement. Our new guide is called How to Apply for Social Security and Medicare. It will help you learn how these decisions may fit together and how to take the right steps at the right time to build a secure retirement plan. Call us at 800-393-4001 to get your copy of How to Apply for Social Security and Medicare. That's 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Experience America's Caribbean and fall naturally in rhythm with the heartbeat of the islands while enjoying incredible beaches, world-class cuisine, and unforgettable sunsets. The weather is perfect all year round, so head to visitusvi.com and book your trip to St. Croix, St. Thomas, or St. John. Enjoy one or all three and enjoy the vacation of a lifetime. USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
I'm going to preface with this next story with I have been a dog owner my whole life. Love dogs, love cats, love animals, pets of all sorts. But this seems like a bad idea. Massachusetts is considering passing a few initiatives that the MSPCA is launching. The bills would eliminate breed-specific bans in public housing and condo bylaws. They would add pet-friendly emergency shelter terms, remove breed bans from insurance policies, cap pet fees, and support elderly pet owners. I'm not going to get into the breed stuff. I think there's plenty of evidence to support that, insurance companies and others and private owners of real estate should have the right to say, hey, we're not comfortable with dogs over a certain weight or of a certain breed based on our perception of possible problems. I don't really see that as an issue. Furthermore, I recognize that trying to find an apartment that will accept your dog is challenging. But as a landlord, I should be able to say no, right? Like, that is going to do. Is there any debate that an animal in the apartment is going to do additional wear and tear to the apartment? right? Like, I should be able as a private homeowner to say, no, I'm not renting to somebody with a dog. I love dogs, but I don't want the additional upkeep. And capping the pet fees is saying that, no, you can't go and do that. And so, I know that we have a weird approach to housing in Massachusetts and rules, but these are private owners of real estate that are making decisions about how to rent out their properties. They're condo owners that want to create rules that fit the most residents. And passing a state law to say you can or can't do this based on specific pet breeds or types of pets, or this is just crazy. This is tie it in with the proposal to put in new rent control in Massachusetts and just make it impossible to own rental property in Massachusetts. And I don't know if there's anything to add on that, Mark.
No, I think, again,
what are we doing?
A good free market framework serves you well here. If somebody now this is passé. I'm going to sound very 19th century here, but you own the property. You should be able to do with it as you please, unless you're hurting somebody else. If that means I don't want to rent to a guy because he's Italian American and they're loud like me, then I should be able to exclude them. That would be illegal, probably.
Definitely illegal.
I use Italian American as an example because I am on both sides, and I feel like I can safely use that as an example. Yeah. But I am sort of.
If I want to have an apartment where I have no smoke detectors, also going to be a problem, and I agree that there should be.
Different story, though.
Yeah,
that's health, safety, welfare. Yeah. That's traditional police power stuff that states have been able to regulate for a long time. But when it comes to lifestyles, including dog ownership, I too am a dog owner. If he wants to peel over my hardwood floor and make it look like a leopard skin pattern because it's all stained now, that's on me. I put up with that, but I would not expect a landlord to.
No.
I would invoke the right to choose here, the right to choose what you do with your
Having
property.
a pet is not some inane human right. If you're going to have a pet and you're going to rent, it's going to cost a heck of a lot more and it's going to be tougher to find a place. Just plain and simple.
It's another example of government intervening in an area where it frankly shouldn't. And now we're talking about state government. I was ranting about the federal government earlier, but the same general philosophy here, I think
should apply.
I think so, Mike. And it's not. Look, we all love the cuddly. You see the pictures in the article, and it's adorable little dogs, and the implication is, I didn't read the whole thing. The implication is cruel landlords are pushing these people out onto the street. But like you said, why would you get into that business if you couldn't do if you can't control what you charge, which is what rent control does.
The idea of forcing this on condo associations and homeowners is just preposterous to me. But anyway, what do you have for us for Stack Roulette?
Oh, you'll see headlines today. This is a quickie. You'll see headlines about the trade deficit falling by 40% in October, and that's true relative to September. But a couple things. Firstly, in the year to October, the trade deficit actually went up by 8% relative to the year before. I don't necessarily think that is a bad thing. That means we bought more from abroad because we wanted to than we sold abroad in terms of goods and services. In exchange for that, foreigners bought U.S. equities and U.S. treasuries or just held on to those dollars. So if your thinking is, well, an increase in tariffs are responsible for that, I'm afraid that's probably not true. There are countries with high tariffs that have no trade deficit or a trade surplus. There are countries with high tariffs that have big trade deficits. There's no correspondence, interestingly.
And keep in mind, too, big story that we haven't really covered yet, but most certainly will be, is what the Supreme Court does in terms of ruling on these tariffs.
Is that coming tomorrow?
It's coming January or early February. I don't think tomorrow, but it is expected this month or
I thought I heard
next.
late January.
Yeah, January or early next February is the expectation.
Well, maybe tomorrow's when they start releasing opinions. Excuse me.
Okay. So, and in the meantime, all the companies that are subject to these tariffs are suing the government to try and get their reimbursements if they get ruled against. So, a lot more to come on the future of the current tariffs that are in place. All the time we have. Markets remain in mixed territory here as we close out the show. We'll have a recap for you tomorrow, as well as a jobs report on a Jobs Friday here on the Financial Exchange. Have a great day, folks.